Good evening, everyone. The headlines say one thing, but the market said something completely different today. Let's walk through what actually mattered, what you can safely ignore, and why a quiet session can tell you more than a noisy one. I am Mandy Prince, and with me is Bernard Gray, our value-focused guide. Bernard, welcome back.
Always glad to be here, Mandy. A calm day is a good day to think clearly.
Let's set the scene with a quick pulse. Indices barely moved. The S&P was essentially flat, holding just under 6,950. The Nasdaq hovered around 23,500, also barely budging. The Dow dipped a fraction, still near 49,400. And the VIX was hovering near 19, nothing alarming. That is it. Not much drama. So Bernard, help me understand when the tape is this quiet. What is it actually telling us?
Quiet sessions are often the market's way of saying, I am waiting for proof. I observe a pause in conviction. There is no urgency to reprice risk, and there is no obvious catalyst forcing a reevaluation. That can be a healthy message. It tells me investors are more deliberate than reactive. The risk, of course, is if the quiet is masking a buildup of unresolved stress, an event that forces rapid repricing. But right now, the absence of panic suggests most participants are not positioned for immediate dislocation.
That is a great point. People hear quiet and assume complacency, but you are saying it might be more like patience. Let's zoom out with the big question for tonight. What did today's calm session reveal? Is this a waiting room or a vote of confidence?
I'd frame it as a waiting room with a soft vote of confidence. When investors are anxious, they don't wait, they sell first and ask questions later. Today didn't have that energy. I observe a market that is willing to hold ownership positions without rushing to add or reduce. In value terms, that tells me we're in a place where people are doing arithmetic rather than reacting emotionally.
Arithmetic is Bernard's comfort zone, so let's get into that. When you say doing arithmetic, what is the market doing?
It is quietly judging whether today's prices are roughly aligned with what businesses can earn over time. If you use a value lens, you think in terms of future cash and balance sheet strength rather than short-term headlines. A calm day says we can wait for the next data point. It doesn't mean risk is absent. It means the market is giving itself time to evaluate risk.
And the headlines were anything but calm. There were a lot of geopolitical storylines, talk about energy pressures, and even chatter about central banks reacting to war-driven inflation. Yet the market barely moved. That is our headlines versus reality theme tonight. How do you square that?
There is a difference between possible risks and realized risks. The headlines emphasize possibilities. The market reacts to evidence. I observed that today's session treated global news as a policy overhang rather than a direct earnings hit. So the trading mood leaned toward, we're aware, but we're not repricing yet. The risk, of course, is if the overhang turns into a concrete change, like a sustained rise in energy prices. But for now, the trading response suggests investors are waiting for data, not headlines.
That is a helpful distinction. I want to ask you about expectations. Many people went into today expecting more movement because of the news flow. That didn't happen. So which predictions came true and which didn't?
The prediction that volatility would rise did not come true. The prediction that the market would keep a cautious posture did. If we had an expectation that this was a day of rapid rotation or heavy selling, that didn't materialize. From a value perspective, I'd say the market behaved like a committee. It listened, considered, and then decided to do nothing.
You are framing it as deliberative, which is interesting. Let's get more specific about what you saw in the money moving from one part of the market to another dynamic. Were there signs of rotation even though the indices were calm?
There were subtle shifts. I observed some resilience in defensives and a bit less enthusiasm in areas that require optimistic assumptions. When the market is quiet, those small shifts matter. It is less about dramatic moves and more about where attention starts to drift. It is a reminder that ownership matters. If you don't like your business's balance sheet in a quiet market, you'll like it even less in a noisy one.
That is a useful line. Quiet markets are the ones that expose weak foundations. Let's talk about the big picture theme. You've long emphasized margin of safety. On a day like today, how does that philosophy help people interpret a calm tape?
Margin of safety is the antidote to uncertainty. On a quiet day, the market is not handing you a clear directional signal. So you go back to what you can control, the quality of the business, the balance sheet, and the price you are paying relative to conservative estimates of value. I observe that investors are not scrambling to reduce risk. They're simply rechecking their math. The risk, of course, is if your math relies on optimistic assumptions, those can break quickly. But if you are using conservative inputs, quiet days become comfortable.
You are always calm, Bernard, but I am sensing a little more conviction tonight. Is that fair?
A touch, yes. Calm markets reward discipline. They also expose people who are trading out of boredom. When I see a quiet session, I take it as an invitation to be patient. In value terms, there is no prize for action. The risk, of course, is if patience turns into complacency. So I still want to validate the business performance, not just the price.
So that is the what it revealed piece, patience, deliberate pricing, and a waiting room vibe. Now let's look at the what it didn't reveal. What do you think investors can safely ignore from today's headlines?
I'd treat most of the speculative commentary as noise. The market's behavior tells you it didn't consider those narratives as immediate threats. If a headline matters, it typically pulls the market in a direction with urgency. Today's lack of urgency suggests that the market is holding a steady view. The risk, of course, is that some ignored headline later becomes a fundamental shift. But until that shift is measurable, it remains just a headline.
That is the headlines versus reality lens right there. We can also talk about the global thread in one sentence. Europe had some commentary about central banks staying alert for inflation risks. It is not a market mover tonight, but it is a reminder that the policy overhang exists. Beyond that, global markets didn't demand the spotlight.
Agreed. I'd file that as a mild policy overhang, not an immediate catalyst.
Let's also address what a quiet day means for the narratives people might be building. The media is always looking for a story when the market doesn't provide it. How should listeners interpret that?
I'd interpret it as permission to do less, not more. It is easy to invent a storyline that justifies action. Yet the market is telling us that action is not required. In my framework, the absence of price volatility is a chance to reread the business filings, look at the balance sheet, and test assumptions about earnings durability. The risk, of course, is that the quiet masks a shift in fundamentals. So I still want to check facts, not just assume stability.
I like that you are not selling calm as a guarantee. You are treating it as space to think. Let me bring this into a tangible question that our listeners might be asking. If the day was quiet and the indices were flat, why should I care?
Because calm days are where habits are formed. I observe that investors who build process during quiet sessions are better prepared when volatility returns. It is the difference between reacting and responding. There is a clarity in a calm session that allows you to review the basics, working capital strength, earning stability, and whether the price gives you a margin of safety. The risk, of course, is if you take calm as a reason to ignore risk entirely. But discipline doesn't require urgency.
That is a key message. Let's pivot to listener perspective. On a day like this, what should a thoughtful investor be doing, not trading, but doing?
I'd be doing 3 quiet tasks. First, revisit the balance sheet of the companies you own, not in detail, just a sanity check on liquidity and debt maturity. Second, read management's most recent commentary with a critical eye, asking if their optimism is anchored in actual demand. Third, review your watch list for companies that you understand but haven't owned, and update your conservative estimate of what they're worth. The risk, of course, is getting complacent and skipping those tasks, because these routines are what protect you when the market becomes less forgiving.
That is the decompression piece we want tonight. No pressure to act, but a gentle nudge to stay prepared. Let's go back to the day's themes for a moment. You mentioned subtle rotation toward defensives. Does that signal anything to you about the market's state of mind?
It signals a preference for durability. Investors are not demanding moonshots today. They're leaning toward businesses with stable cash flows and understandable balance sheets. That fits the value lens. The risk, of course, is that if growth reaccelerates quickly, those defensive tilts can look conservative, but the market doesn't seem to be pricing in a sudden acceleration right now.
And how do you, as a value investor, deal with the tension between stability and opportunity? On quiet days, it is easy to say, let me wait, but value investing also requires action when the math works.
True. The discipline is to act when the discount to value is evident, not when the market is quiet or loud. A calm session doesn't negate opportunity. It just reduces the noise around it. I observe that if your analysis yields a meaningful margin of safety, you don't need a dramatic day to justify ownership. The risk, of course, is if your valuation is too optimistic or your balance sheet assessment is too generous. So the math has to be conservative.
You are using your words carefully, and I appreciate that. Let's touch on one more theme before we head to closing, the idea of waiting for a catalyst. People often say the market is waiting for a catalyst. What does that mean through your lens?
It means the market is waiting for information that changes the arithmetic. A catalyst is not a rumor, it is evidence. It could be earnings, it could be a shift in rates, it could be a measurable change in demand. Today, none of that arrived, so the market sat still. The risk, of course, is that people expect catalysts to always be positive, but they can just as easily reveal weakness.
That is a good reminder. Catalysts are not inherently good or bad, they just change the story. Let's bring this home with a brief summary of what actually happened versus what was predicted. Here is my read. The headlines were loud, the market was quiet, predictions of volatility didn't play out, but the market's patient posture did. Subtle rotation hinted at a preference for stability, not a flight to safety. Does that align with your view?
That aligns. Well, the day was a test of patience. Those who expected a dramatic repricing didn't get it. Those who expected a calm market found confirmation. The risk, of course, is if we confuse patience with certainty, but it's not certainty, it is simply a pause.
And that is a reassuring pause, not a reason for complacency. Before we close, I want to ask one personal question. Bernard, does a quiet day make you more or less optimistic?
It makes me more focused. Optimism isn't the right word. It is clarity. A quiet day allows me to separate noise from fundamentals. I observe that this is when you can sharpen your appraisal skills. The risk, of course, is if clarity makes you overconfident. So I keep humility close.
That is very on brand. All right, let's give listeners the promised watch list for tomorrow. Bernard, I need exactly 3 specific items. Go ahead.
And listeners, 3 things we're watching tomorrow. First, rates reaction, whether yields continue their upward pressure or settle back. Second, breadth follow through, whether today's calm was broad-based or hiding concentrated selling. Third, any guidance digestion from major companies. Do investors treat commentary as confirmatory or cautious?
Perfect. And to close, a short takeaway. Today was quiet, and that is okay. Quiet days are where you refine your process, not your nerves. If the news felt loud, the market quietly told you to slow down.
I'd add that patience is not inactivity. It is deliberate attention to what matters, business quality and value.
Exactly. Sleep well knowing that you didn't miss anything urgent today. The market gave you space to breathe, and we'll be here tomorrow to help you make sense of whatever comes next. Good night, everyone, and Dud Scripts.